matters, the rand remains sluggish so far today, together with the local index. Ahead of a slew of domestic economic data due this week, Petri Redelinghuys is the trader and founder of Herenya Capital Advisors. He joins us now to take a look at the latest market moves. Good afternoon to you, Petri. How are we looking at midday trade?
Good afternoon. Thanks for having me. I think today is a bit of a tough day. Most of last week, all of last week, China was closed for Lunar New Year celebrations, and they have come back to the world of the working, if you will, with a furious thunder. So we saw quite a poor performance from their market this morning, as well as, the big heavyweights, 10 cents on all of those, which has had quite an impact on our market. Our market down around 1% on the day. The rand also around 0.75% to the softer side or weaker on the day. So it's a bit of a trial by fire to start the week. US futures markets also pointing lower. So it seems as though we are definitely starting on the back foot. But then again, it is only 12:30 on Monday. There is much left in this week before, we know our fate.
Yeah, but wait, there's more. Oil prices fell in early trade ahead of forecasts that OPEC Plus will likely keep output unchanged during their meeting this week.
Yeah, look, so this is an interesting situation where we have a sort of structural shortage of oil production, yet demand for oil is falling, which is indicative of this recession narrative. So now, all of last year, the U.S. markets came down. We saw some economic contraction. Depending on who you ask, some might argue, I'm in that camp, that we are already in a recession, at least in U.S. and global markets, just by the sort of standardized textbook, very old definition of what bear markets and recessions are. However, it seems as though general consensus hasn't yet accepted that this is the case, right? That is starting to become a bit more accepted now, I think, as we see that, earnings revisions for companies are coming down. Actual earnings from U.S. corporates are starting to lower. So this recession thing is really starting to bite a little bit. And I think that what we're seeing is a lower oil price, lower oil demand, even though we have the structural shortage situation where the forecasts are looking at, this recession thing is actually really happening, and it'll probably lead to lower demand in future, which is why there's a negative reaction on the oil price at the moment. The oil price has since stabilized, to be fair. It is now currently up 10 basis points, or 0.1%, since the news had come out. However, it still is sort of depressed if you think about the actual sort of on-the-ground structural situation in the oil market where there just isn't enough supply. That, is one side of the coin. The other side of the coin is there is this expectation that economic activity will continue to slow down, and that will dampen oil supply. So it is an interesting move that OPEC chooses to keep production, the same. It has had a relatively negative impact on the oil price, but I don't think that over the long term it's a major thing. I think that we probably see oil remaining sort of above $80 for quite some time. Personally, I'm quite bullish. I think that once China starts to go back to, work as usual or business as usual, which I think is starting to happen, we probably see energy prices pick up quite a bit. But in the short term, the market is more concerned with, whether or not the U.S. is going to enter into recession, officially, or not.
So what is behind that approach? Is it flamingo style or ostrich style, where you bury your head in the sand?
I think it's, the truth is there's a lot of politics these days intertwined in the information that's available to us, right? Nobody wants to look like the bad guy. I mean, if you look at what constitutes a recession, really is 2 consecutive quarters of economic contraction. If you look at what constitutes a bear market, it's if you look at 2 particular U.S. indices, and if they both make lower highs and lower lows, it's like a technical analysis thing, that constitutes a bear market. It seems as though what happens is generally people try to change the narrative a little bit. They say, yes, we've had economic contraction, but X, Y, Z have been the drivers. It's not our fault. And that feels to me like a very political thing, as politicians around the world try to look the best they possibly can. For example, there's a lot of people in the US are trumping their horns, saying, "Look, we've had the most job creation in the history ever under a presidency." Yet, contextually, that's because we had a pandemic close an enormous amount of small businesses, and those people are now entering into the job market, right? So, and a lot of people were obviously laid off temporarily during COVID, and they're now coming back into the labor market, and that is now presented as this, amazing achievement, but it is actually just a normalization of, the environment, if you will. So, to a large extent, I think that that's what's happening, with this sort of economic growth narrative as well, where all the signs are we have inflation, we have consumers that are under more demand, we have a labor market that's coming under more pressure, consumers that are under more pressure as well, and all the signs are really pointing towards people are really struggling, yet the narrative is sort of painted as, well, we've got these other great things that are looking really good. We've had a lot of people sort of go back to work after lockdown, so that's an achievement. Well, in reality, it's not that the economic situation is much better than what it was a year ago. In fact, it's much worse, but if you isolate certain specific statistics, it might sort of change the viewpoint somewhat. So I think there's a lot of that going on, more so than really an honest dialogue around where we are economically.
Sure. Okay, let's come back home and take a look at Nampak. They've published a voluntary trading update for the 3 months to 31 December 2022. How did they fare?
So they are in a spot of bother, I suppose, as many other companies are. I mean, in general, I think there's a couple of things. Revenue growth was in excess of 20%, so that is not bad. But there is, of course, a reduction in operational profit and impairments due to foreign exchange. So essentially what's happening is they're operating in two sort of jurisdictions that is really difficult to get money out of, both Nigeria and Angola. And the problem with these countries is that there's not a huge amount of liquidity. So if you make lots and lots of money in those countries and you want to take your money out in dollars, there's not really actually enough dollars available for you to pull out of the country. Nigeria, we know, and Angola are both very strict with their exchange control, and we've seen other companies like MTN, for example, also have problems in the past with these less liquid sort of territories, where you might have $1 billion in their country, but you can't get it out, right? So it seems that Nampak is struggling with that same situation, and as those economies go through difficult times, particularly Angola, you have this hyperinflation situation. So you've got a bunch of money sitting in their country, but that money is losing value extremely quickly, and you're struggling really hard to get it out before it loses even more value. And that is one of the major problems I think that they've had over the last period, where they've taken these massive foreign exchange losses as the money that they have in these countries that they're struggling to get them out of is losing value very, very, very quickly. So that's one of the bigger things. Some of the good news here, though, is that they've reduced the size of the capital raise that they want to do. They said initially they were looking for $2 billion. They have now sort of communicated that that it won't be any bigger than $1.5 billion that they're looking for. So that is, quite a bit smaller than what it was. However, the market's still not taking it very well. They also provide an update on their sort of strategic turnaround plan, or the way that they're working really hard at turning the company around. It was in a very difficult position for some time, but it seems as though there's evidence that is working. However, they're not completely out of the woods yet, so they are coming to the market and asking for more capital. The market not taking it very well. The share price around 12.4% on the day.
Let's take a look at the Labour Department. They've again promised to issue massive fines against JSE-listed companies that failed to meet employment equity targets. Is there cause for concern?
Look, I mean, I think there's a few things that I want to say here. One, I don't know if you remember, there was all this backlash and unhappiness about Discom, that it sent a letter to the staff members about, hiring policy and all that kind of stuff. This is the law, right? The companies have to follow these guidelines. They don't really have a choice. It's much like SARS saying, look, remember to do your tax return by the end of February if you're a business, or, there's jail time. This is just the way that they communicate this stuff. So I don't think that it's necessarily a cause for concern. I think that everybody knows the rules. Those that don't follow it will get in trouble. Those that do follow it will be fine. SARS likes to do a very similar thing every year where they, whether you're a compliant taxpayer or not, they'll send you a veiled threat. Like, hey, remember, you've got to pay your taxes or you'll be in trouble. I think it's just a strategy from government to kind of strong-arm and enforce, the message that, look, don't even consider breaking these rules because there will be consequences. Most people pay their taxes on time. Most people don't, evade tax or do anything like that. So the tone of those messages are sometimes unnecessary for the majority of people, where you're constantly being wrapped over the knuckles for something you're not even doing. But I think it's just a stance that government takes to say, look, we are strong and we will prosecute you if you aren't, or there will be consequences if you aren't compliant. Whether or not this is a massive threat to companies, I don't think it's a new piece of information. I think it's just a reiteration from the Department of Labour to say, look, play by the rules or face consequences. And I think most people are playing by the rules, so I don't think it's too much of a cause for concern, to be honest.
Petri Redelinghuys of Herenya Capital. Thank you.